Hey, what's going on, guys? Welcome. Let me know if you can hear me okay. I've tested a ton of stuff. I'm looking at the stream quality as well. I've been struggling with this for the last half hour, so please let me know if you can hear me okay. Welcome. I know that a number of you have got questions on here already. We will get to those in a moment. I'm actually going to try and kill two birds with one stone, and I'm going to stream also to Instagram. So down here, I'm going to have my Instagram account open as well. So I'll take questions from both you guys who are live to me right now on YouTube and on Instagram as well. But anyway, thank you so much for joining me. Yes, you can hear me loud and clear. That is fantastic. I didn't do one of these last Sunday because I was away for my birthday. We went away for like 24 hours or so just to kind of get like a different scenery and stuff. So we were flying this time last week. But yeah, so this week, normal Q&A. I know that there are questions in here already. I just want to say a couple of things actually. Thank you to everyone who showed some support to the short film this week. The reception and the response from that has been really, really positive. Really do appreciate it. Thank you. I hope people took something positive from it as well. So thank you. Right. If you're on Instagram, welcome. I'm streaming this live on YouTube. So most of the questions that I will take will be on YouTube. But if you do have questions for me, you can leave them on here and I will pick them up as well. There are already some questions in here. There was one put in before I actually went live. So therefore, I can't quite I can't quite put that on screen, but it was a question about why the S&P 500 trades after the UK hours have closed. Think about it from a geographical point of view. Um, UK, America, they're in different time zones. So what that basically means is that when the UK market's closed, because there's a difference in the time zone, the US market is still open. So it's simply just geography as to why the US market is still open, even when you see that the UK markets are closed. You are predominantly investing in the United States, though. So just bear that in mind because that's really important to know. Right, let's have a look. There's an interesting question here from Food Dweller. I've not had this, to be fair, so it may be the people that you're trying to use potentially. She's asking, "Hey Pete, how are you? I'm good. Why is it when you present Starling or Monzo bank statements as official statements for proof of address or any other official uses, they don't accept?" And the follow up statement that you have here is that they tell you to bring street bank statements rather. I've not had that personally, and I bank with Starling, so I've never had anyone kind of like turn down the statement saying that that's not good enough for my proof of address. I think what you can do though, so what I do is I download a PDF statement, but I make sure that it's a certified copy. So you then get the Starling Bank kind of like certification stamp on it when I download the PDF. So maybe it's worthwhile doing that. If you are using Starling, literally you just go to your account and print your statement and you can choose a certified statement. That's it. That's always worked for me. I don't know why anyone else wouldn't accept that per se, but I've never had any issues um, with using Starling as proof of address. So it may just be providers, but try using a certified copy of your statements instead to see if they'll accept those. They should do. I don't see any reason why not, to be honest. Andy's on here. Andy, welcome. I had a really good birthday, thanks, mate. All right, let me just get this. The birthday video credits is so amazing, inspirational. Keep it good work. I'm sure you'll get more views and inspired more people on your journey. Thank you, mate. Appreciate it. Yeah, I was a little concerned about it being a bit too braggadocious, if you will. I was very, very mindful of that when we started kind of like toying around with the idea of actually doing it. So I wanted it not to be about necessarily things that I've done more than anything else. That more than, how can I say this? The journey and lessons learned. That's what I kind of want it to be about. But I appreciate you saying that, Andy. Cheers. Shivan. Thank you. Another comment on the documentary there. I'd like to congratulate you on your documentary. It was quite inspiring. Thank you. Now, you guys may not actually have noticed, but it's not perfect. And I'll say this just as a behind the scenes type thing. Um, we didn't know it was going to turn out as good as it did. Tim's awesome in terms of capturing footage and stuff, but there were some very very basic little mistakes that I didn't think about on the day that happened on the day, and it wasn't until I actually saw the first draft that I was like, amateur mistakes. Simple things like, if you're going to do anything on camera, you should never wear white. Well, on most of the day one shooting, I was wearing white. Never ever do that. Ever do that. And Paul Brunson told me this, and I didn't realize it until I saw it in the edit. That why am I wearing white? And so the contrast just wasn't right. I would definitely change that. The audio is definitely isn't perfect, but then again, it's my first documentary, so you know, things will get better, and we'll get better with it as maybe there become other things that I want to shoot as a documentary potentially. I mean, to be honest, that was supposed to be a test for a bigger idea that I have around trying to produce some content that will um, tell stories, but also have a financial education lean to it as well. We didn't quite do that with the one that we um, shared last Monday, but that is the ultimate goal, essentially, is to have longer form content that will follow a person's journey, a person of note, but actually tell and delve a little bit into finances, financial lessons, those kind of things, but have it from an inspirational, educational point of view. That's what it was there to test. The response from the video has been positive, so there is legs for it, but we definitely need to do a better job with maybe some small little mistakes that we kind of realized we made in post production. But appreciate it. Thank you. Right, I'm just gonna have a look and see if there are any questions on here on IG. I'm also scrolling YouTube as well, so bear with me as I multitask this. I'm going to be doing a video this week on. So I did a video with about Money Farm in February, and it was a review video, just kind of going over their proposition, how they work, the services that they provide, and I actually invested some of my own money with them. So this week, I'm actually going to be doing a video where I'm going to be looking at the performance with Money Farm, 10 months after the fact. And actually, I've not looked at the numbers specifically just yet, but I think, aside from my individual stocks, they are the best performing RAN investment, so fund that I'm invested in so far this year. I've got to look at the numbers this week just to make sure, but they're in double digits, and they've done very, 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 very well for me. Dare I even say they've done better than the S&P 500, the Vanguard investment that I've got, because that's currently down right now. It's not down as in the negative, but it was up, and it's down from where it was previously. So I'm going to be doing a video on that this week as well. So let me just double check on these. Hey guys, if you are watching this on Instagram, by the way, I am going to be looking for questions on here. But if you want to jump over to the YouTube channel, that will probably be the easiest way for us to interact. There are no questions on Instagram right now, so let's just see what we've got here on YouTube. There's a question. Do you see a buy in crude oil down 12% just Friday? I don't buy crude oil at all. If you're going to be using, the only way you can buy crude oil, or one of the best ways to buy crude oil would be to buy futures. I don't trade in or invest in futures, so I stay away from crude. You may want to, if you're okay with the instruments that you would use to access crude oil, which will be futures predominantly, but you have to kind of understand exactly how they work. I think we covered this, it may have been last year, when the price of oil tanked because of the whole debacle between, I think it was Qatar and some of the Hmrc producers, and I think it was some of the African producers or European producers, where the prices tanked quite sharply. People were very, very eager at that point to get involved with, oil. And I said to people that you have to be careful. One thing you don't want to be doing is looking at news and using news as your source of your investment choices. By the time it's hit the news, it's probably already too late. So if they're saying it's 12% down, what you need to be able to factor in is, has any increase or rise that comes off the back of that news already factored into the prices? You're never really going to know. But general rule of thumb is, by the time it hits the news, it's already too late. But I don't trade in crude oil specifically. But if you do, mate, please make sure that you understand exactly what you're doing and how you're going to access them. But it's not something that I hold or have an interest in holding myself. Edna, I'm good, thank you very much. Sean, welcome. There's another question here from Andy. This is a good question, actually. Do you think the new COVID variant is going to send the market into another dip, or people don't care much anymore and move on with life? Thus, there'll be no much earthquake. Okay, so there won't be that much of a shock in the stock market. It's interesting because actually on Friday you did see the markets move. I mean, the US was down, Europe was down. There were some really big territories. The UK was down off the back of the new variant. The issue with the new variant is, just reading a little bit about the variant on the news, is that apparently it's a lot more transmissible and it's a lot more effective in doing so than some of the old ones. And there is a big fear that even if you are vaccinated, that it is now immune to the vaccines, which is why you've seen the UK specifically kind of close down the borders to those 4 countries in southern Africa specifically, and why now it is mandated that you've got to wear face masks out. So the dip on Friday, I didn't really keep track of the dip on Friday. I'm just going to go and have a look on here actually, and just have a look at some of the charts. But there was a dip on Friday. Do I think it's going to have a massive impact on the markets generally? That's hard to say. I think if you look at it from a pragmatic point of view, we're probably one of the countries that is heavily vaccinated globally. So we've had a really good rollout in terms of vaccinations. We've had a good number of uptake. I think America's pretty much there. We're better than Europe, I would say. I mean, in some parts of Europe, I think it's Austria or somewhere like that, they're going back into full lockdown. And there's a few territories in Europe that are thinking that the exact same thing as well. I think because of our vaccination rates, we should be okay. Is it going to spook the markets? I think there's a little bit of resistance and a little bit of padding we've got in terms of, right, let's just see what's going to happen. If we go into full lockdown again, then I would say yes. But it's really going to depend on what the government's stance on this is going to be, whether they toughen up their stances or not, and just generally what the global picture of it is going to be. It's really, really hard to say. I mean, I'm just looking at the markets and going on to the major indices right here. Actually, I'll just share this with you guys on the screen so you can see what I'm looking at, because everything is in the red pretty much. So you guys can see this here. Let me just get rid of that. So Dow Jones down 2.5%, S&P 500 down 2.2%, Nasdaq 2.23. You've got small caps 2000. Everything is pretty much down. The only thing that is up is the VIX, and that is the volatility measure, the VIX basically. So everything. There's a lot of markets there, guys. Look at it. Everything is down off the back of that. The Karachi 100 is up 0.41%. So I think the news of this new variant isn't great, particularly in certain regions. Europe definitely going to be struggling for sure. But vaccination rates do matter here. And if it does turn out, I think the big thing is going to be whether or not they fully establish whether the new variant is immune to the vaccines, and not just, any vaccine, but all of them, or maybe one or two of them. Because remember, you've got the Moderna one, you've got the Pfizer one. There's also some new developments now with the oral tablets that you can take. It's going to be about what level of protection we have with the vaccines in place right now. That's going to be the big determining factor. So I think that the markets, as they are right now, we may see see a bit of a dip, on Monday, Tuesday next week, maybe through next week. Will it take a 20%, 30% dip? I don't know. I would like to think that we've got enough protection in place so that it doesn't, but crazy things can happen. We might get to January, February, thinking about a new lockdown, and I know that's completely and utterly unfathomable at this point in time. But it really depends on what the research shows about this new variant. I hope it doesn't personally, but who knows? Right, there is a question here on Instagram. Let me just get this from Ben. Hey Pete, happy birthday for last week. Given the dip in the Bitcoin over the last 10 days, have you personally reinvested or waiting to see where it goes? So at the moment, I have got about another 1,000 or so that I'm going to use to purchase back into Bitcoin. I mean, Bitcoin, the last time I checked was like 54,000 or something like that. Let me just go into this. The question is, can it go any lower? I don't know just yet. I mean, I'm gonna be looking at this week just to kind of see where we are. But my Bitcoin portfolio is broken into like different tranches where I've gone in at different levels. So overall, I'm up on Bitcoin, but there's a large part. There's a large pocket that I invested, which is actually down at the moment, which is down by about, where is it? Not basic attention. Basic attention's doing wonders for me right now. It's doing very, 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 very well for me right now. Where am I? So if I go into this tranche, so this tranche of my Bitcoin allocation is actually down. I'm down 12% on one of my allocations on Bitcoin. So I'll be going in a little bit more a bit later on, but I haven't run any numbers and I've not really paid that much attention to it. Do I think it could go below 54,000? Possibly. It really depends on. I mean, because Radic will probably be the one who'll be able to answer this more from a technical analysis point of view. But if I'm looking at look at the last support on this, it's a big dip. I mean, does it go down to 50,000? Does it go down to 40,000? Who knows? But I'll be looking at it this week to see where I'm actually going to inject a little bit more into it. I mean, I've got £1,000 in cash. Actually, I've got about 1,600 in cash right now, potentially to go in, but I've not made any moves just yet. I'm still kind of just waiting to kind of see what happens with it. But it is volatile, guys, and this is what I mean. It's like, it feels like yesterday we were at $66,000 a coin or something like that, and there was a lot of euphoria around Bitcoin. When you're investing, it's really important not to lead with euphoria and news. Potentially, you need to have a little bit of conviction around what you're going to do. If it goes down to about 50,000, I'm definitely going to jump in. I would like to think that it doesn't, but if it did dip down to like the 50,000 region, I'm definitely going in at that point. I'm just trying to decide, do I go in at 51, 52, 53? That I haven't quite decided on just yet on the Bitcoin side. But yeah, other currencies I've got, Ethereum still up for me at the moment. Basic Attention still up for me at the moment. Mana's still doing okay for me at the moment. So I've got some other bits and pieces in there which are doing really, really well. The only coin that I'm down on at the moment is Bitcoin, though. So let's see if there's anything else on here. All right, let's take one from the chat here. Andy, thank you for that super chat, mate. I really do appreciate it. You're always on here as well. At least I don't know that you're one of these people that if you can't tune in, you actually then watch the replay. So I appreciate you with that super chat. Thank you very much. Edna's just saying she was just thinking about Money Farm. Yeah, I mean, look, they've done really, really well for me. In the video, because their approach is very, very different to like maybe some of the stuff that you would hear about how you should invest if you're starting out. And look, there are so many paths that you can walk. You have to decide on the path that best suits you, right? But I think that if you are going to be looking at investing in the stock market, their approach is different. They definitely have a service that I think is valuable. I don't mind putting my money with them because I think at the end of the day, they're doing something and performing a service for me that would otherwise take my time and add additional things for me to assign my time to. And even now, I'm short on time. Next year, I'll be short on time as well. And I think if your circumstances so suit that, you're okay with paying maybe a little bit extra to them to actively manage your investment, then I think that that's a good compromise for you to make. I believe, and I'll mention this in the video, and I've got to do some analysis because, again, I do want to look at it in comparison to everything else that I've got to see whether they are the best performing ones. But when things were going nuts um, earlier this year through market turbulence and all that kind of stuff, they were actively rebalancing the portfolio. They rebalanced, I think, about 2 or 3 times. So they were looking at the markets, thinking, right, we don't like what's going on. We're going to reposition because we think there's an opportunity here. And that has been a large contributing factor to the fact that they have been able to return double digits, even though we have been quite volatile. So I'll cover a little bit more about them in the video this week, but I do need to do a little bit of I need to do a little bit more analysis around how they actually come in versus everything else that I've also got as well. Yinka's asking, is it a good idea to open investment accounts with banks or savings accounts better? Or is a saving account better? To be honest, look, you got to do what you feel is right for you and go for a provider that you feel will best serve you. Personally speaking, though, I wouldn't go with a bank for any investment account. I just think that they'll be way too expensive. And number two in that line of thought in my head is knowing how the banks operate. They will have like a very, very limited range of options for you to invest in. Now, that's fine if you want to outsource it and just, give it to somebody to go and manage for you. But you can find better people to go and manage it for you than your bank. The banks kind of stepped away from this like back in 2007, 2008. And even when they were in the peak of really helping people invest in the market, they were limited at best at that point in time. They've not caught up or kept up with technology advances or any of the stuff that's going on now in the investment world. In my opinion, they're just too far behind. So I wouldn't use them for investment accounts. Savings accounts, though, yeah, if they've got a decent rate and they've got a good offering, then yeah, I would look at them for savings accounts. But investment accounts, no. I just think there are too many better providers out there that you could use than your bank, than your local bank. There just are, unfortunately. Especially if you're going with one of the traditional ones like Barclays or HSBC or someone like that. And even if you are in the client profile where you get private banking, I still think that you can get a better service. In fact, I know that you can definitely get a better service not using them. But that's just my opinion. You got to do what is right for you, though. Let's trade in. Do you think it's going to be changed soon as people can be sure Hmrc is not going to contact them after a few years with extra income tax bill to pay because it decides to treat them? I think there must have been some preamble there. 1 second, mate. So let me just go back. I think I've missed something because it feels like that is a follow-on from a previous statement. So are you talking about trading stocks? I'm assuming you're talking about trading crypto, right? That's what I'm assuming. I can't see any previous comment or previous question to be able to answer that properly, mate. I mean, look, if you're trading at the moment, then you'll be managing your own tax position, right? You'll be keeping record of all of your transactions and what tax you need to pay. I think on stocks, it's a lot clearer and a lot more transparent in terms of what you need to do than it is in the crypto space. There's a lot of confusion in the crypto space around, income tax, dividends, capital gains tax, when it's due, what you should be doing, all this kind of stuff. And the reason for that is because it is still pretty much new. And I guess to a certain extent, Hmrc are still trying to catch up with, how do they actually monitor these kind of things? I was reading a really interesting article today saying that some of the Bitcoin exchanges are actually going to get raided on a tax perspective because from a business point of view, how they operate as a business doesn't meet the standards of a traditional tech company. So therefore, there are additional tax levies that they're going to have to pay. Now, the question is, as an exchange, and I know this is a bit of a departure, we'll come back in a moment, how do they manage their tax position as exchanges, as companies? It's all very much up in the air right now. So, I mean, the video that I did on Friday was hopefully there to kind of give a little bit of a deeper kind of insight to some of the things that I have found on the crypto side to kind of help people. But, the fact still remains is you're going to have to pay income tax. You're going to have to pay capital gains tax. In most cases, you're going to have to pay in both of them if you're mining or you're getting airdrops, those kind of things. And the unfortunate truth is that if you're not paying attention to it, and we know that these exchanges are already providing information to HMRC, the last thing you want is HMRC knocking on your door because they know that you've got an account with, I don't know, Coinbase, for example, or Binance, where you hold over 5K or 10K. I think the limit was 5 or 10K, one of those two. You don't want that. So you have to make sure that you're taking the steps to make sure that you don't shoot yourself in the foot and you have HMRC on your back trying to get, taxes out of you just because, you've traded Bitcoin and you've done okay with it and you've not really declared it. It's very, very touchy ground. I've been trying to find an accountant that is happy to come on YouTube to talk about this specifically, but even within the circles of accountants that I know, there seems to be a lot of uncertainty still in terms of how this is all going to play out. We're in kind of uncharted territory from a tax point of view. But I would say to people that, if you are trading cryptocurrencies, you have anything in crypto, you really need to be documenting everything that you hold. If you trade out or close a position, because again, on the disposal side of things, if you're swapping from Bitcoin to Ethereum or Bitcoin to Solana or Solana to Cardano, that is a disposal. So you've got to record that transaction. And if you're up, you have to record that because the minute you breach over your £12,300 capital gains allowance, you are going to be required to pay tax. Now, yes, you can offset your losses, but you still have to be able to document what you traded in order for that to apply. So, I mean, there was someone who mentioned they had like 1,000 transactions. That's nuts. And I hope that the person's keeping track of it, because if you have to retrospectively have to go back and try and track every one of those 1,000 transactions that you've done and try to then document whether you're in a profit or loss position, that's extra time that you probably don't want to be paying attention to. But Lekis, if you're professionally trading, you probably have all of this under control anyway, so shouldn't be a problem for you. There was a question up here about EasyJet. Let me just go back to this. The question was, do I think that EasyJet will recover pre-COVID levels? I think it's got the potential to do that, for sure, definitely. I think it's a question of time. How long is it going to take? I mean, you saw AIG stocks, airline stocks, take a tumble last week when the ban on those 4 Southern African countries came in. We're in an area of uncertainty, particularly with the new variant. They're going to take a bit of a hit as a result of this. And God forbid it gets a little bit worse and other territories get shut down and locked down, then you're going to see that the airlines are going to suffer even more. I think they have the potential to get back to pre-COVID levels, but I think ultimately if you're holding that stock, you need to be willing to, wait maybe 5, 6, 7 years for that to get back to a level where you're in a position where you might look at it and say, actually, I'm happy to come out of it because you think that you've made some profit and it's viable to actually close your position as well. So that's what I think on EasyJet, and that's the same for all airline companies, to be fair, if you're holding their stocks. I've got AIG stocks and I know it is it's really, really difficult. Okay, there's a question here from Naeem. I want to take this because this is a little bit of a different question. I'm also scanning Instagram as well. John, I am good, mate. Thank you very much. All right, okay. I'm going to come back to Escape Velocity on Instagram in a minute. He's asking me about Shiba. So I'll come back to it in a minute. But let me just answer Naeem's question here. So he's saying, thank you for sharing your story. Great insights. And I liked what you mentioned. That sometimes in job interviews, there's an actual employees present at the candidates. It's very, very true. Look, you can't walk into those kind of rooms and just assume that, they're going to take you for face value. When I ran my team in Canary Wharf, I actually put members of staff in there as well, because the reality is that if you're trying to employ someone, and employing someone is the hardest thing, it is so difficult to get right because people put on their best face on interview day, right? So half of it is trying to decipher how much BS is in the CV, and how can you identify that as a BS in the interactions that you have with people. And it's amazing how people behave when they feel that they're not being watched, or they feel that there is no accountability in a certain circumstance. And it's very, very difficult. It's really, really difficult to do. So, it's one of the biggest lessons that I've learned that, you have to, if you're in a professional environment, you really do need to have your game face on, and you have to be as genuine as possible. Yes, obviously you want the job. That you know what I honestly think? I think that today, and maybe this is social media related, I don't know. Maybe I'm just maybe pessimistic in my thinking here, but I think that people are generally worried about being themselves, particularly when you talk about the professional environment. And I know that it's really, really hard. And sometimes you may walk into circumstances where you can't necessarily be yourself, or, you know, in certain circumstances, the version of you that you want to portray may be inappropriate. And I've had that. I've certainly learned that through my career, where you do have to learn how to read the room, and you have to understand how you navigate that room as well. Now, there are arguments to the contrary to say that actually you should always be able to be yourself in the professional world. I think where we are today, 2021, that is becoming more so the case. But I think through the last 16 years, certainly, of my career, I haven't had the luxury of being my 100% self all of the time. And that's probably one of the biggest lessons that I've learned, stepping away from corporate world and doing this, and the fact that actually I can be myself. Because you know what? It's not just the fact that I'm my own boss, but actually for what I do, putting up a facade or pretending to be a certain kind of person would not serve me. Because especially making videos and creating content, the podcast, so on and so forth, people can see through that. People can see when you're being genuine or not. And I think that you now, in today's world, like 2021, 2022 onwards, be yourself and be unapologetically so. But be in being yourself and being genuine, be aware that actually being you may not be right for every single room, in terms of you may not be accepted or may not be liked. And you have to be okay with that, because I talk a lot about first impressions when I do like mentoring, and I speak to younger kids in schools and college. I talk about first impressions. We always worry about things that we cannot control, but one of the biggest things that we can control is the first impression. So how you turn up, how you present yourself, those are all things that you can control. And in being you, you have to find the most genuine, authentic version of yourself that puts the best projection of you forward for the situation that you're walking into. And I think that's really, really important. And that's one of the biggest lessons that I've learned in corporate life, more than anything else there. But thanks for that, Naim. Right. So there was a question about SHIB. What do I think about SHIB? Look, SHIB, this is purely down to my investment philosophy. Okay. I don't invest based on hype this and hype that. I'm very methodical. And I won't invest in anything that doesn't have a track record that I can discern myself. And I say discern myself because that is the operative word. Many people say it has got a track record, and to them, to their discerning, it's 100% a solid investment. For me personally, no. SHIB is not it for me. The fact that it's a meme coin and it's a joke of a joke, that for me doesn't make it a solid investment. Now, that doesn't mean that if you hold SHIB that obviously you've invested wrong and you're an idiot for doing so. Absolutely not. It's your money at the end of the day, and it's your investment choices. But for me personally, it's not something that I would invest in. Most of the coins that I got are the big ones. It's Ethereum, it's Bitcoin, it's Cardano, it's all of those coins. Yes, I've got Mana. Yes, I've got Basic Attention Token. I've got Basic Attention Token because I've been using the Brave browser, and actually I'm getting Basic Attention Tokens every day because instead of using Chrome where they make money off me, I use the Brave browser, and they give me money because of me using their browser, and it reverse engineers the traditional relationship that we've had with internet providers where we sign away so much of our rights to use a platform. They make money off the advertising and I get nothing. Well, basic attention token swivels that on its head. I use the Brave browser and they share with me the revenue that they generate in advertising responsibly by giving me basic attention tokens. And as the value of those tokens increase, I make money off me using and taking my time to use their browser. It's a no-brainer for me, really, to be honest. So that's why I hold that. But I will typically only just invest in some of the bigger coins. I don't necessarily go after meme ones. But I said that approach isn't going to be right for everyone. I completely and utterly appreciate that. Right, I'm just going to see where I was. All right, okay. So this is an ISA question here. Hi, Pig. Good stuff with last week's video. Two questions. One, can one withdraw money from Stockton shares ISA anytime? The answer to that is yes. I'm just looking for your other one. There were two questions there, mate. There's only one there. There it is. Does one need to inform Hmrc when putting money into a Stockton shares ISA when one withdraws money or when there is a profit on investments? Basically, the question is what I need to report to Hmrc when investing. Right, okay, so because it's an ISA, you don't have to do anything. Like when you open your ISA, one of the things that the providers ask you for is your national insurance number. That will basically inform Hmrc and let them know how much you invest, when you invest it, what gains you have, all that kind of stuff. But fundamentally, the ISA is completely tax-free. So you don't have to do any reporting. You can take money out whenever you want to. You have to be a little bit careful around taking money out and putting money back in. If you haven't got a flexible ISA, then you need to be a little bit cute. So a flexible ISA, so your ISA allowance every single year is £20,000, right? A flexible ISA will mean that you can put £20,000 in. If you take £5,000 out, you can replace that £5,000. If your ISA is non-flexible, if you put in £20,000, take out 5K, you can't replace that 5K anymore. So when you're sourcing your ISA, that may be a question for you to ask of the provider, whether it's flexible or not. You need to be mindful of that. But ultimately, for reporting, you don't need to worry. You don't need to do anything because it's all tracked via your national insurance number with Hmrc when you open the account in the first place. John T here is asking whether I have a Discord group. I did. It's not particularly active anymore. I'm thinking of launching a newsletter in the new year. I haven't spoken about that. I'm still doing a little bit of work on it, but it's going to be an investment newsletter, actually. It's going to be a weekly newsletter. So there may be a Discord group attached to that. So just keep with me on this. It's not going to be related to the channel. It's going to be a standalone newsletter. So I'm not going to mention more than that at the moment because I'm still running through some very, very important things of how it's going to be written. I've kind of got that down, but how it's going to be written and the tone it's going to take as well, because I want it to be separate to the channel, essentially. Right. Okay, so someone's asking on Instagram here, when do you have to pay capital gains tax and how much do you have to pay? How much you have to pay is dependent on how much of a capital gain you've had on your investment, George. So your capital gains allowance is $12,300 per year. That's your tax year. So your tax year runs from April the 6th to April the 5th each year. So within that period, if you can make a capital gain of $12,300 up to that amount and pay nothing, anything over you then have to pay tax on. So the brackets at the minute are 10 and 20%, depending on whether you're a basic rate taxpayer or a higher rate or additional rate taxpayer. So if you're just a basic rate taxpayer, which will put you in the bracket earning below 50,000 a year, then it's 10%. If you're earning over 50 grand a year, then you'll be paying 20% in capital gains. So really, it depends on how much your capital gain is during that period of time, and it depends on what tax bracket you sit in as well. All right, so food dwellers has come back. Let me just find your let me find your comment, mate, because it's broken up with a couple of other comments that came in around about the same time. This is a link. I can't see that link, mate. Um, I can't see the link. If they're providing you a link telling you that they can't accept a statement, then that's a provider preference. I don't know what it is that you're looking to buy or what service you're signing up to, but maybe look for an alternative. Like I said, I've never had any issues at all with providing my bank statements via Starling as proof of address. So that will be a provider, whoever it is that you're trying to use. That's their preference, I guess, which is a bit weird because Starling, Monzo, they are actual banks. They have banking licenses. They have to run to the same rules that Barclays and all the other big banks, high street banks, have to adhere to. I don't see why they should say that they can't take one. That's very, very weird. It really, really is. Okay. Okay. This is so let me just catch the gist of this. All right. Okay. So thanks for sharing your life journey. I experienced the same experience. I felt my life in Nigeria made me resilient and had a positive journey in the UK. Do you think your Nigerian journey made you strong? Absolutely. I think it has. It definitely gave me an appreciation for opportunity and what opportunity means. Um, I say this all the time, maybe not on this channel, but in other circles that I speak at, that one thing that we definitely take for granted here in the UK is opportunity and what we have access to. I mean, you talk about first world problems. People obsess about first world problems here, like way more than they should. And I think until you experience no water, like that sounds like a really basic thing, right? Running water. But when you experience having no running water, like getting your water from a well, where you have to boil the water to make it drinkable, where you don't have any electricity, reliable electricity, where you may be a day or two, a week with no electric at all, where you're burning lanterns, right? Kerosene lanterns. And most people watching this won't even know what kerosene is, right? When you live in that kind of environment, you then get back to the UK and you watch people fuss about, you know, not being able to get two box of eggs in a shop when eggs were a luxury, and you start to hear about, people worry about the size of their TV screen and what car they're going to buy. Those are very, very much first world problems. What my journey through Nigeria definitely showed me is the contrast between the two. The fact that you can have pretty much nothing, and I guess when you have nothing you find joy and appreciation and gratitude in different things. It's not about material things. One of the reasons why I never show or talk about anything that I have or anything that I do is because I think that in the first world, in the Western world, we worry too much about material things, cars, watches, luxuries. And don't get me wrong, those things are very nice to have. They are. Like, if you've got it, absolutely go off and enjoy it. But I think a problem arises when that is your source of, I guess, fulfillment and satisfaction. And for the longest time, certainly when I started working in Canary Wharf and started to, make some good money, because I came from a place where none of this glitz and glamour type, designer type things were available. I spent a lot of money chasing those things. And to a certain extent, you then forget what really matters. Like when I was in Nigeria, like we found solace in, just normal life. Like we found appreciation in just normal life, like family, friends, those kind of things. And we were grateful for the little things that we did have. And I guess that's the biggest lesson I've learned from Nigeria. It's opportunity, and it's the value of opportunity. If I can, you know, be allowed to come to the UK because I was born here, and I have all of these opportunities to work in Canary Wharf and to do this and to do that, it would be almost criminal of me not to try and maximize that opportunity. Because if my brothers had the same opportunity, they would probably do better than I did. And I think it's almost disrespectful if I realized that I had all of this opportunity in front of me, then just thought, I'm okay. You know what I mean? Because I've seen both sides of the coin. And, you know, we talk about representation and just trying to make sure that you're an example and I guess you can inspire people. That's the thing. Like, don't take for granted what you have. Like, what you have is fantastic. Other people would kill for what we have here in the UK, what we have here in the Western world. People would kill for that. You know, a lot of the luxuries that we just see as day-to-day mundane things are luxuries elsewhere, and we need to be grateful. We need to be appreciative of what we do have. And that's the one thing that I did learn from my journey in Nigeria. It definitely gave me a sense of drive. And you know what? Yes, I was homeless and I've been home. I only mentioned that in glancing over in the video because I didn't want people to feel sorry for me. I didn't want it to be kind of like I'm moping or anything like that. It's not about sympathy. It's about trying to hopefully get people to see that it doesn't matter where your starting point is. You just get going with your race and just stay the course, and hopefully you'll carry yourself through. Where was I? Right, let me just check Instagram very quickly. I've got a lot of waves here, guys. I'm not going to be able to wave back to everybody. I always try to make sure that I wave back to everybody in Instagram when you're on here. I've just done a load right now, but I'm actually searching for questions. Spare me 1 second. Graduate scheme. Okay, this is a good question. This is from Carl. So, hi, mate. I work for gas and oil trader. As a gas and oil trader for Gazprom on a graduate scheme. I'm already maxed out my £20,000 ISA. So you've got £16,000 in the stocks and shares, 4K in a lifetime ISA. What should I do next? Okay, so I'm going to give you a couple of scenarios. So, depending whether you need access to the money. So I'm going to assume that you might need access to the money. Hopefully, it goes without saying you're paying into a pension, into your auto enrollment. Hopefully, if you don't qualify for it, you should do. To be fair, even on a graduate scheme, you should do. But if you're not, make sure you pay into a pension and make sure that you get their employer contribution because it's free money, right? But since you've maxed out your ISAs, you've used the lifetime ISA, which is great. You've got stocks and shares ISA, that is great. Maybe look at a general investment account. And what you want to do is you want to pay your money into a general investment account and then put a note in the diary for April the 6th next year. Any money that you then put in your general investment account, you want to move from your general investment account into your new ISA for the new tax year. That's called feeding your ISAs with a general investment account. So look at a general investment account with whoever it is that you've got your stocks and shares and lifetime ISA with right now. They will definitely have one. And maybe just think about feeding your ISA once the new tax year rolls around. All right, okay, let's have a look at this one from YouTube. When using S&P ISA, SPX ISA, is it best to leave money in until the date you plan to remove it, or can you use it as a stock and pull out when it's dropping like now, then reinvest when it rises? I'm just trying to make sense of what you mean here, mate. SPX, do you mean a stocks and shares ISA? Can you just clarify that for me, please, BMW? Just so that I'm clear and I actually give you the answer that you're potentially looking for. Where are we? See, the other thing you've mentioned here is pulling it out and then putting it back in. I mean, look, you don't want to do, preferably you don't want to do that, mate. Because if you're if you're coming out of the market every time the market falls or dips, then you're going to be coming out of the market quite a lot. Um, Unless you're trading. I mean, if you're trading, that's a completely different thing. But if you're investing, the idea is that you're putting your money in because hopefully over the next 2, 3, 4, 5 years, you feel that whatever you're invested in will be of greater value than it is today. So you have to be okay with the fact that the markets are going to fall and not pull your money out at a loss, only to get in when it's low to get a rise. I mean, essentially what you're doing is it's like taking 2 steps forwards, 3 steps back. Because let's just say, for example, you bought into something at say £10, right? That £10 then falls to £6, right? So you've made a £4 loss pretty much straight off the bat. And then what you're indicating, or what I think you're indicating there is at £6, you basically cash in and buy back in at £6 and then wait to go back up. Well, you should just stay in the first place. It makes no difference. You should just stayed in the first place. You don't want to be crystallizing losses when you're investing. That's the last thing you want to do. You don't want to crystallize any losses. Remember, if you're watching it on a screen, like I said earlier, like my Bitcoin is down 12% on a portion of my Bitcoin. That isn't real. I mean, yes, I'm looking at it right now, and there is a percentage and there's a monetary value, and it still hurts that it's down by this monetary value. But I know that it's not real until I literally go and say, right, I'm going to go sell this. And for me, it's more painful me selling this right now than actually being like, okay, I can sell this, get back in. But what happens if I get back in and then actually it falls even further? So I'm still in the same place. I'm still at a loss. You don't want to be crystallizing losses, mate. So the idea is that if you're going to be buying things and investing into, your stocks and shares ISAs, leave it there for whatever your investment term is. And hopefully you do have one. So your investment term will be informed by the reasons why you're investing in the first place. And that should hopefully dictate what you've invested in. You need to have all of that in place before you kind of, start dabbling around with taking things out and putting money back in. You don't want to do that. You really want to leave it, mate. All right, this is an interesting one. I've just started trading and investing a year ago with eToro, and I've made about 15% profit. When will I be expected to pay any tax? You may not be paying any tax if you haven't breached any of your allowances. So, depending on how much you've invested and how much that 15% property equates to, will determine whether or not you need to pay any taxes on it. If it's capital gains, then again you've got that £12,300 limit before you start paying tax. So you just need to do a calculation of what that 15% equates in terms of a monetary amount to determine when you're going to have to pay tax. But, really you should be doing a self-assessment to Hmrc if you are over that capital gains tax allowance of 12,300. This is an interesting one. Kiki's asking, is Trading 212 still a good platform, or do we need to change? Look, I've still got my money with Trading 212. I know that there's been like a number of videos talking about them missing accounts and all that kind of stuff. Like, guys, please take this with a pinch of salt. At the end of the day, nobody really understands or knows what's going on in Trading 212 to understand why their accounts are late. Their accounts being late doesn't mean that they're doing anything illegal. They may have a perfectly good reason for their accounts being late. The reasons for that could be numerous. Yes, does it raise an eyebrow? Yes, it does. Okay, companies should not be submitting their taxes late, but they may have a very, very good reason for it. So the main thing is, unless there is something that is out there at the moment where you can really ascertain and be fearful that they've done something horrifically wrong, then you should be concerned. The reality is, though, you won't know whether they've done something horrifically wrong until it's too late. But that's what the Financial Services Compensation Scheme is there for. Now, it's only going to cover you in certain circumstances. It's not going to cover you for things like investment losses. It will cover you if they go bankrupt or if they get wound up because of mismanagement, those kind of things. But that's what that protection is there for. What I would say is, if you are uncomfortable and you you can't sleep well at night, or it is a real worry for you, then you should move it, because 100%, if you've put money somewhere, you need to be 100% comfortable with the fact that you've got your money there and not be worrying about, I've heard this, I've heard that. If there's a doubt in your mind, move it. I've only got a small amount of my cash with them. So at this point in time, I'm not really that worried. If I had, a large amount of money, then maybe I might look at it a little bit differently. But you have to, within your provider selection, make sure that you're selecting the provider that you feel comfortable with. But like I say, please take some of this stuff that you're seeing online with a pinch of salt. Like, at the end of the day, this is YouTube, so a lot of stuff is done to sensationalize and kind of, get you to watch stuff without stuff being substantiated. Um, I'm not going to name any names, but yeah, just be careful. Just be mindful of that as well. Um, there's a good question on here on Instagram. Ruru Realm. What's more important, investing or emergency fund, in your opinion? I think anyone who is investing who hasn't got a good control over your finances. So, for example, when I say good control, I mean as in your monthly budget. If you're living paycheck to paycheck, you need your emergency fund before you begin investing. Period. You absolutely 100% need to have that available, because if you don't, what will happen is you'll start to invest in the markets. You might need cash because something happens, and then all of a sudden you need to start looking at your investment portfolio, and God forbid the investment is down. So if you haven't got good control over what your month to month income and expenditure is, you absolutely need to have your emergency fund. If you're a little bit more solid and you just know that from a month to month, you know that you've got a good disposable amount of money, yes, you still need your emergency fund. Absolutely, because that is the foundation. But I would argue that you maybe have a little bit of leeway. But your foundation in terms of your emergency fund is absolutely crucial. You need that to be able to invest with confidence, really, to be fair, and without having to worry about needing money out if the markets are down, and utilizing things like credit, so on and so forth. So you definitely need your emergency fund before you invest. Do not do it the other way around, because I've been around long enough where I know that has resulted in worry for a lot of people. Okay, someone else is asking on here, can't drink milk. Can't drink milk. I'm looking to open my first stocks and shares ISA. I was looking at using Wealthify, but I'm not. But I'm now leaning towards opening a Vanguard Life Strategy 100 account. Would that be a good move for a beginner? Um, Potentially, yeah. I mean, look, Vanguard is cheaper than Wealthify for sure. But Vanguard is very, very different to Wealthify. Wealthify actually have kind of like a managed proposition. They're going to do a lot of that work for you. Yes, you can go and put the Life Strategy 100. Questions for you: what are you investing for? How long are you investing for? That life strategy is a 100% equity fund. You wouldn't be able to get, well, you could get one of those with Wealthify, but they will take you through a risk profile. So if you've not done your risk profile, you don't know what level of risk you're looking to take in relation to why you're investing, your investment goal, and how long you're investing for, then I would question whether the Life Strategy 100 is the right one for you. Second is, with the Life Strategy 100 account with Vanguard, you have to really understand what it's invested in and what its purpose is. Very easy to ascertain that. All you basically need to do is go on to the investment objectives and look at some of the documentation that it provides you in terms of the key facts documents, that kind of stuff. Make sure you read that. If you don't understand what any of that means, then you should definitely be looking at using Wealthify instead. If you do understand what the language means, then by all means crack on. But what I'm trying to say here is the Life Strategy Vanguard option is a very good option. It's got its advantages. Vanguard have been around since 1975. They manage God knows how many trillions for people now. It's a very, very low cost. Two massive ticks in the box. But if you don't know what you're doing, if you don't understand the language, then you probably have no business picking that one, because remember, you're going to invest it now. You need to review it every single year. You need to make sure that you're keeping tabs with it. Whereas if you have it with Wealthify, they'll be managing and doing all of that stuff in the background. So the question is, do you have enough time to be able to look at it and monitor it yourself? Do you understand what the language means? Are you clear on your goals, your investment time horizon? Are you clear on the level of risk that you're willing to take? Those are the key questions. If you answer positive to all of those, then by all means crack on. If not, then you need to probably reevaluate which one of the two you go for. I do coaching for this kind of stuff. If you want to book a free call with me, you can book a free call with me. I think there are on Instagram, there are links on my link tree to book a free 30-minute with me. Otherwise, you can just go to the website conversationalmoney.com and you can book a free 30-minute discovery call there. But those are just some thoughts for you. Edna, yes, they do. They do charge fees. I can't remember what it is now, but it is there on the website, and you can do it based on how much you want to invest. So they will break it down for you exactly how much it's going to cost. For me, yes, I paid more for my money farm portfolio than I have on my Vanguard S&P 500 investment, but they performed way better than the S&P 500 since when I invested in the S&P 500. And even if I back test it, I believe that they're still up, because I think the S&P 500, the VUSA in Vanguard, I think this year is about 8 or 9%, money farming in double figures. So yes, I paid extra and more than obviously what I would have paid if I used Vanguard. But the simple fact of the matter is they performed better. They made me more money. So all right, I'm conscious of time. We're coming up to the hour mark now. I'm going to take maybe one more from the gram and maybe two more from the YouTube comment section. Okay, I can't see any more on the gram, so let's have a look on here. Gelato. No, mate. There was news on 212. No, I mean, I don't have any predictions on stock market. Look, I purposely don't produce this kind of stuff, mate, in terms of what the markets are going to do, because the reality is nobody knows. Nobody's got a crystal ball. If it opens down tomorrow, it opens down. If it opens up, because you know what, there's maybe a little bit more confidence because a bit of news has come out over the weekend that they get preview to, that's what happens. You cannot control any of that. That's just the reality of investing at the end of the day. So I don't know whether the markets are going to open down or up tomorrow. It's anyone's guess, really, which is why, having a clear goal and an idea of what you're doing and how you're investing and what you're investing in, particularly if you're picking individual stocks, is so, so important. It's really, 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 really important. Okay, I like this question. Let's have a look at this one. I'm going to take one more after this. As a self-employed person, is it better to invest into a SIP or a stocks and shares ISA? It depends on your circumstances, Elgin. So if you're self-employed and you're earning quite a bit, then a SIP may be better for you. I mean, I could talk about this for hours and hours and hours, but let me just give you some really brief headline stuff. So if you're self-employed, you're invested in a SIP. If you're a limited company, which I would imagine you are, if you pay into your pension fund, your business account, that is an allowable expense, so you can save on capital gains tax. On corporation tax, right? So it's a business allowance. It will help you reduce your corporation tax. If you're earning 50, 60, 70,000 pounds that you're taking from the business, then a pension is going to be better than an ISA, purely because, well, you can pay up to 40,000 pounds into a pension, whereas the allowance for an ISA is 20,000 pounds. So that's a key distinction there. How much are you earning? That's a really, really key point. The disadvantage is that obviously within the pension, you can't touch it until you're age 55 under current legislation, right? Whereas with an ISA, you can access it whenever you want. So when I say it really depends on your personal circumstances, it really, really does. It really depends on how much you're earning, how you're pulling the money out of the business. It depends on what you need this money for. Do you need access to it in the short to medium term? Or are you actually okay with it just going into a pension and building for you over the years? Even within your pension. So if you are a basic rate or higher rate taxpayer, or even additional rate taxpayer, you can argue that you're going to get additional tax relief on your pensions as well, which is free money from the government essentially. So you're going to have that lumped into your pension as well, whereas within your ISA you're not really going to get that. So it depends on your personal circumstances. There's a lot more to it than just that, but hopefully that kind of helps a little bit. All right, there's quite a few here. Let me just pick out one more. I'm going to take this one right here. Okay. What's the best thing to do at my stage to plan ahead, as my pension is tiny and I started a penguin late in life? Depends on your circumstances again. So I'm going to assume that you're employed. If you are employed, then you've got free money from your employer that you absolutely need to be taken advantage of. So first thing to do, you need to get sight of your workplace pension. You need to know where it's invested. What are the options available to you? You need to understand what contributions your employer is paying into your pension currently and what they are willing to pay in. In other words, if you pay in 7%, will they match you at 7%? Because it's a no brainer. If you pay more into your pension and your employer is happy to pay in the same amount as you, it's free money. You might as well take that. Plus, you're going to get all the tax relief as well. So the first thing I'd say, mate, to get you started, if you are employed, you need to speak to your HR team and get details of whoever is running your pension. You need to understand what's actually available and what your workplace scheme actually does in terms of your contribution levels. You don't want to be leaving free money on the table. And the second thing you also want to do, once you've got all the information, depending on how long you have left to retire. So I don't know whether you've got 5 years, 10 years, 15 years, 3 years, or even 2 years. You need to make sure that it's in the appropriate investment vehicle or investment fund for you. But general rule of thumb, if you've got 10, 15 years plus, you need to get it into something that's going to be really aggressive to give you as much potential for return as possible. You should really try to sit down with someone so that they can explain, obviously, the risk factors, so on and so forth, because you want to make sure that you get that right. They may have someone available as part of the provider who's looking after your workplace scheme. They might have someone you can speak to, but that's definitely one of the things couple of things that you should be thinking about doing straight off the bat. If you've got additional money on a monthly basis, think about how you can actually maybe put into a pension, into a SIP or something like that, just to help you top up. And depending on how long you've got left as well, you want to try and at least get a headshot or a head start on how much you need in retirement. And I mean that seriously. If you're like 5 years away, you should really be looking ahead to say, right, okay, in 5 years' time, if I had to stop work today, how much money do you need coming in? Because it's very, very hard to plan around any concrete numbers without knowing what that is. And in order for you to do that, you need to take in consideration whether you're going to be mortgage free, whether you've got rent to pay, your bills, state pension, what you might have coming in from any workplace pensions, new, current, or old. Those are the kind of things that you need to be looking at as a general rule of thumb to kind of get a very high level bird's eye view of what your situation is, so that you can actually plan from a place of knowing, right, this is what I'll be facing in X amount of years' time in terms of my income. That's going to help you massively. I know I've just spewed a lot of stuff there, but hopefully that's helpful, mate. All right, cool. Hang on a second. I've just noticed on here, you just added a couple of things on here. Let me just put this up. Just to add that I can't afford to put in £900 a month. So is there other options? I can invest around £400 max a month. Yeah, I mean, look, it all depends on your circumstances, mate. you would need to map those numbers. You would need to map out those numbers with whatever existing provisions you have. And if you've worked at loads of places before and you don't know whether you've got any old pension schemes that might have been lost, the first thing you need to be thinking about is going back over your work history and trying to find any old pensions that you weren't aware of and identifying those, because you'll be very, very surprised at how much money is left on the table. Like from pensions that people just lose because obviously they change employers, they change addresses, and therefore communications kind of get lost and you just forget that you have them. Um, there'll be things that you can do for £400 a month. Absolutely. And 400 quid is a lot of money. But the question is, how does £400 map, and what does the scenario look like based on the £400 contribution and everything that you have currently in present contributions and in past schemes or pensions that you've got with old employers? This is... it's hard for me. There is so much that we could talk about when I talk about this, and if I was advising you as a client, I'd be asking you for a shed load of stuff. I'll be getting you to fill in forms and getting information, and we'll be sending off for stuff, and trying to get a sense of everything so that we can start from a place of knowledge. Obviously, I'm not advising now. I coach predominantly. Even when in coaching, there's things that I can and can't do within coaching. Clearly, I can't give you advice, but you being able to map and understand what your scenario is going to be in terms of, do you know what your state pension allowance is going to be? Do you qualify for full state pension? What is your forecast? You really need to know that, mate. You really, really, really need to know that. So there's a lot of moving parts. There's a lot of moving parts, but for 400 quid a month, you should definitely be able to do something. The question is it going to be enough? Do you need to stretch a little bit more? Are there other things that you need to take into consideration? And I don't know anything about your personal circumstances. I don't know whether you're going to be mortgage free or whatever. I don't know those things. I don't know what your income and expenditure is, because a lot of the time when you're planning for these kind of things, we take a snapshot of things today and we fast forward to X amount of years in the future to be able to come up with an amount that you're going to need. And the idea is we work worst case scenarios so that we know that, okay, worst case scenario, you're here, but actually if you get it absolutely right, you're here. And that allows you to plan adequately as well. Mate, there's so much I can talk about. And this probably isn't the right forum to be able to do that, but hope that helps anyway. All right, guys, thank you so much for joining me this Sunday evening. I think I've mentioned this. Have I mentioned this? I have mentioned it. I will mention it again anyway. In the new year, I'm going to be partaking in Secret Spenders, which is going to be on Channel 4. So if you are looking for a New Year's spring clean, trying to get your finances in order and all that kind of stuff, then maybe apply to participate. They're casting right now. It will be on TV. It's not going to be one of those things where it's going to, expose your finances and stuff. It's all about trying to help you organize your finances as much as possible. So on Instagram, I did post the flyer to it. What I'll probably do is I'll put something in the community section of the channel. So if you do want to go and apply for it, the email address that you need, I just need to grab this actually 1 second, is going to be, said money saving the other day, and it was wrong. So I want to make sure that I don't get it wrong this time. So the email, actually, no, it is right. So the email that you need is moneysaving@southshore.uk. So that's moneysaving@south, SOUTH, shore, SHORE.uk. So you can apply to participate there. But guys, I appreciate you this Sunday evening. Have an amazing week, and I will surely speak to you again on Tuesday. Catch you in a bit.